Hello and welcome to the Weekly Market Metrics. I'm your host Sandeep Rao and we are in week 29 of 2026. And after last week's lesson about celebrating things too early, I have decided to predict absolutely nothing this week. By the way, did you know that the peace deal between Iran and US had nothing concrete about the Strait of Hormuz and how it would be managed? I just figured it a few days back when I read this piece in Al Jazeera. On one end, Iran claims it alone runs the strait, and on the other hand, we have Trump who's charging ships a 20% levy to keep it open, which is nothing but some sort of protection money. So in a way, the world's most important choke point currently has no rule book, just two people taking turns claiming whatever they want. And here we are wondering why markets can't really catch a direction. Which brings us to the markets last week. The good news is it was less volatile than the week before last, but the even better news is actually inched higher, closing at around 24,330 versus 24,200 the week before, up about 0.5%. With that, let's look at what happened last week and what could happen in the coming week. So without further ado, let's start with the rate of change across indexes. Starting with the headline indexes, well, after several weeks of broader market leadership, the headline indexes finally look green. Nifty 50 was the only index to end the week in green, gaining 0.5%, while Next 50, Mid-Cap 150, Small Cap 250 and Micro-Cap 250 all closed lower. Though the broader picture remains unchanged, Micro-Cap 250 continues to lead over the 3-month period, followed by Small Cap 250, while Nifty 50 remains the weakest of the headline indexes. The rate of change chart from the weekly market metric sheet is now on the screen, and among the broader indexes, Nifty Bank was the strongest performer this week, gaining 0.8%, followed by Sensex and Nifty 50, which added 0.8% and 0.5% each. Nifty Mid-Select was the only laggard, slipping 0.7% after its recent outperformance. Looking at the distance from all-time highs, Nifty Mid-Select continues to lead, trading less than 1% below its record high. Nifty Bank is now within 5% of its peak, while Nifty 50 and Sensex remain 8% and 9% below their respective highs. Looking at the year-to-date performance, the broader market still holds a comfortable lead, but this week saw some profit booking across mid, small and micro caps. Nifty 50 on the other hand edged higher, helping narrow the gap slightly. Now let's look at Nifty on various time frames, starting with the weekly time frame. On the weekly chart, Nifty resumed its uptrend, gaining 127 points, or 0.5% to close at 24,334. More importantly, the index has now posted its second consecutive weekly close above the 24,200 zone, reinforcing it as an important support level after last week's successful retest. From a moving average perspective, there's no major change from last week. Nifty continues to trade above both the 10-week and 20-week SMAs, while the 40-week SMA around 24,750 remains the next major resistance. Volatility seems to have cooled sharply from the elevated levels we saw in week 28. The weekly trading range nearly halved, falling from 726 points to 367 points this week, indicating that the market has settled back into a more controlled phase after the sharp swing seen earlier this month. Friday was the most active session with 268-point range, while the rest of the week remained relatively subdued. And as a result, the 5-day average daily range has come down to 202 points, staying well below the 10-day average of 217 points and suggesting that short-term volatility remains fairly contained. Let's now look at Nifty on a daily time frame. Now, if you see the daily chart, Nifty spent most of the week consolidating after last week's sharp recovery on Thursday and Friday. Monday through Thursday saw the index oscillate within a narrow range between 24,000 and 24,250 before Friday's 1.1% rally that pushed it above the 24,250 resistance once again. The move brings Nifty back within striking distance of the 24,465, 24,600 resistance zone, which remains the next hurdle for the bulls. From a moving average perspective, the technical structure continues to improve. Nifty remained well above the 21-day, 50-day and the 100-day moving averages throughout the week, with all three now beginning to slope higher. The next major hurdle remains the 200-day SMA around 24,820. A decisive close above it would be an important long-term breakout and could open doors towards the psychological 25,000 mark. Another interesting observation is that Nifty remained within the range of last Wednesday's large bearish candle, which formed because of the news triggered by the US-Iran ceasefire breakdown. And for 6 of the 7 sessions, the range remained within that. It was only on Friday that the index finally broke above that range. Now, this breakout may have been driven by the earnings expectations for the index heavyweights, I'm not sure. But Reliance, HDFC, Kotak, ICICI and Axis are all set to report results over the weekend, making next week an important one for Nifty. Moving on to the hourly time frame, the hourly chart, Nifty spent most of the week chopping around the 50 EMA with neither the bulls nor bears able to establish a clear direction. And that changed on Friday as the index broke higher and ended the week comfortably above the 50 EMA, reinforcing the short-term bullish trend. Talking about the Nifty weekly expiry, which happened on Tuesday, July 14th, the at-the-money straddle opened at around 127 points, while the entire day's range was just 133 points, the narrowest trading range of the week. For non-directional option sellers, it was almost an ideal, perfect expiry. Even more interesting was the last hour of the trade. Unlike the sharp 3 p.m. moves we've seen on many recent expiry days, Nifty stayed remarkably quiet last week. The index was trading at around 24,050 at 2:30 p.m. and closed around the same level. Honestly, when the market gives you a day like this, what more could an option seller ask for? Let me know in the comments if your expiry went as smoothly as the market did. Now, moving on to what to expect in the coming week. Looking at the week ahead, Friday's breakout above last Wednesday's bearish candle is an encouraging sign for the bulls. The first level to watch now is the 24,250, 24,300 zone. As long as Nifty holds above it, the short-term structure remains absolutely constructive. On the upside, the immediate resistance lies around the 24,500, 24,600 zone, and beyond that, 200-day SMA near 24,820 remains the next major technical hurdle. A decisive close above it would be a significant milestone and could pave way towards the psychological 25,000 mark. Now, on the downside, 24,000 continues to be the first important support, followed by 23,800 zone, which has repeatedly attracted buyers over the past few weeks. Overall, the bias continues to remain cautiously bearish. The market seems to have absorbed the recent geopolitical shocks well. It has reclaimed key moving averages and now appears to be looking towards the upcoming earnings season for its next trigger. Now, if you look at the straddle premium to gauge the expected range for the upcoming weekly expiry, which is on Tuesday, July 21st, the Nifty at-the-money straddle is currently trading at around 248 points, up from 192 points last week, implying that an expected move of roughly 1.02% on either side. And that gives us an expected range of approximately 24,582 on the upside and 24,086 on the downside. Implied volatility has increased from last week, suggesting that the market is expecting a bigger move. With several Nifty heavyweights announcing earnings, it will be interesting to see whether the index stays within its expected range or breaks out of it. Moving on to India VIX, which gained 7.3% during the week to close at 13.15. I would say while volatility has picked up from last week's low, but it still remains at relatively comfortable levels. Moving on to sectoral performance, it was a fairly mixed week. Nifty IT emerged as the top performer with gains of 4.3%, followed by media at 2.5%. Auto, services and bank also ended the week in positive. Compared to last week, realty dropped out of the top 5 after leading the charts for a while, and IT continued to remain among the strongest sectors so far. Bank also made it to the top 5 this week, and with some of the largest banks set to announce results, it'll be interesting to see if the sector can maintain its momentum. And now moving on to TJI sector baskets. And even here, IT large cap tops the weekly leaderboard, up 3.5%. 2 weeks in a row now. But last week, caution still applies. This basket is sitting 26% below its 52-week high and almost down 22% over the year. But even with the underperformance, it's still something worth keeping an eye on. The one basket I'll actually point you towards is the EMS one. Electronics Manufacturing Services, the companies that build electronics for large brands or contract manufacturing as it's called. It's been one of the structurally supported stories in Indian manufacturing, and the numbers show it too. It's up 3% this week, but look at the shape of the returns. 8.5% over a month, 18.9% over 3 months, 30.3% over 6 months. The one-year number is only at around 6.9%, which tells us that most of this entire move happened only in the last 6 months. And here's something I noticed across TJIs this week. Not a single basket is at the 52-week high this week. So the breadth seems to have paused a bit, but should not be a cause of concern. Moving on to commodities, well, gold was trading at around 1,40,000 while silver was near 2,18,400. Both metals continue to remain under pressure this week. Despite a few short-lived pullbacks, they are still trading below their 50-day moving averages and continue to make lower highs and lower lows. Unless they reclaim these key levels, the broader trend continues to remain bearish. Even on a weekly basis, commodities were quite mixed. Crude oil was the only standout performer, rallying over 14% on the week as supply concerns came back. Copper was largely flat, ending the week marginally higher. Precious metals, gold and silver that is, remained under pressure. Gold fell 2.3% while silver fell 3.6%. Natural gas also ended the week slightly lower, but despite the recent correction, it continues to be the best performing commodity for the year 2026 so far, up about 136% on a YTD basis. That's pretty much it for commodities this week. So overall, in summary, Nifty ended the week with a modest gain of 0.5%, but the real story was Friday's breakout after several sessions of consolidation. The index continues to hold above the 21, 50 and 100-day moving averages, while the 200-day SMA around 24,820 remains the next major hurdle. The broader market took a breather this week, although the long-term leadership of mid-caps and small-caps remains intact. Among sectors, IT led the gains while bank made it to the top 5 ahead of an important week. In commodities, crude oil surged on renewed supply issues, while gold and silver remained under pressure. For me, the bottom line is a bit like this. The overall market structure continues to look fairly constructive, and as long as Nifty holds above the 24,200 to 24,000 support zone, the focus remains on moving towards the 200-day SMA and eventually the 25,000 mark. Moving on to the events to factor in for the coming week, well, there are no major known macro events scheduled over the next week. The focus instead shifts to the earnings season, which has now begun. With several large companies reporting results, it'll be interesting to see how the market reacts and whether those earnings provide the next trigger for the index. So yes, that's pretty much for the week. If you find the series useful, don't forget to subscribe to the channel, and yes, do share it with your friends. Until then, stay curious, stay steady and enjoy your weekend.